Welcome to the StockMentor.com studios here in the beautiful Black Hills of South Dakota. I'm your stock mentor, Brian Johnson. I'm making professional trading simple. Welcome to this weekend's video for this Sunday, September 20th, as we explore what we may see over the next week of trading. Options expiration is now done with and over with, and we can get back to some normal, what I call normal trading. Everything we saw this week was actually normal, even though it looked like the volatility was extremely high. I guess the volatility was high, but what we saw was not to be unexpected. We are still in an uptrend. So my bias going in is neutral to bullish. It has to be until we have been proven otherwise. We've popped over some resistance, and now we're looking to see if the bears can finally make a move and maybe pull this back and get the bulls on their heels for a change. And because it's Sunday, I will do a really quick plug for those of you that have not subscribed to the newsletter. It's $15 a month. That is little to nothing. I know a lot of people are actually paying upwards of $100 a month for some newsletters. Mine's $15 a month. That's a drop in the pan, and I will show you or tell you some of the calls I had for my subscribers last week. These were things I brought up for the long side. So these are all plays to the long side that I had for my subscribers last week, and those were A, B, V, A, F, D, R, C, E, D, J, P, M, and RIM. Those were all calls I had to the long side last week. If my subscribers played just any one of them, they would have made a lot of good profits off that particular call last week. Certainly enough to cover the $15 that it cost for the newsletter itself. That's probably what a lot of you are actually paying in commissions to get in and out of a trade, is probably $15. So for one trade, you can have the newsletter, which would give you a lot more ideas than what you see even here in the daily. The weekly newsletters has completely different ideas than what you see here. It works the same way. It's just a newsletter. You watch it, makes notes of support and resistance. I go into a lot more about the markets and what I'm watching in the markets that my daily viewers don't see. I also do intraday emails and tell people to be careful of this or be careful of that as I see things happening during the course of a week. Plus, you get, like I said, different calls. I think there were about 13 different calls that I had for my subscribers over and above what the daily video people get. So I will list those or put those on a little sheet and list those at the beginning of the video. If that's of interest to you, please sign up. Give it a try for a month. You don't have to subscribe for a year. There's no commitment. It's just a 1 month, just month by month commitment. Leave it up to you to decide what you think of it and see if it's worth your time. So let's move on into the markets here. We are looking at the Dow 60-minute. I said this a little bit on Friday too. This looks kind of bearish to me, to be perfectly honest with you. Had this nice move up, big move up right into a resistance area. Start to a move down, and then a slow kind of grind up here back into resistance. So right now we're looking at a potential double top formation, really with the resistance line and what I have drawn in here. It's a potential ascending triangle. My bias, like I said, still has to be neutral to bullish, so be careful of a move to the upside again next week. Would not be unheard of to see that happen based on what we've seen here with the last few weeks. It's been bears come in, everybody goes, oh, this is it, this is it. They try to go short, and they get their hand slapped, and the bulls run it right back up again. Tomorrow, I think after my daily video is done, I think I'm going to talk a little bit on the fear. If you guys are afraid to pull the trigger on a trade or just not comfortable about getting into a trade, and it seems like fear overtakes you all the time, we're going to talk a little bit about that tomorrow after the video, after Monday's video. But watch this tomorrow. This is the line to break. We break down below this line. I'm looking for a break below the 20 period on the 60-minute chart short term to give me an idea of some potential move there. Otherwise, below 97.50 on the Dow is your number to get really short. I think that's a very defensible short if we can break the 97.50 area. A break above the 98.55 area. Once again, bulls could be taken over. Very defensible long play there. Moving on to the NASDAQ, you can see we're in this channel. We're back to the bottom range of this channel. Below 1720 is a good defensible short, as well as about the 1715 area. 1710 if you really want to be on the cautious side. You could play it down from there, from the channel formation. On a daily of the NASDAQ, you can see we're right back up here. I went ahead and put a daily now of the NASDAQ on here too. Hadn't had that before. But you can see we're right back up to a resistance area. So we have been very overextended. We are holding out here at the top. We've seen a lot of these formations actually resolve themselves upwards, as crazy as that is. I am going to say that I still like to sell resistance and buy support, so I would not be afraid to take a small short entry right up here on the NASDAQ. Probably not a 100% short entry, but a 25, maybe a 50% short entry up here with a small, because you can put a stop above it and put in a very small stop and not have to worry about a large stop loss on this particular order if you get it up here. So a good trade up here. On the weekly, you can see we have really busted above this 200 period moving average. We keep moving up. No reason to think we won't reach the 1773 area eventually. That is a 61.8% retrace from like the entire move. That's a huge, huge move by the bulls. SPX on a 60-minute, same type of a look as all the other ones. In a little channel, break to the downside. Really below the 1065 area would probably make me or get me the most cautious here. And then below 1060 again after that would be another very good shorting opportunity on the SPX. Be watching those levels. Otherwise, above the 1075 area would also be a good move. But all we're seeing right here is a move to the upside, a break above this channel, and now we're holding here above it. For all practical purposes, that's just a high base at this point. So a break above 1075 means higher prices ahead. Otherwise, we're looking for a close below that 1060 area. That would be very good for the bears. On a weekly, right back up to resistance. That's why I'm a little bit cautious here from a weekly standpoint on what we're looking at going into next week. We really want to watch this closely. Now remember, this is a weekly candle. Even if we start the week even and break up, it's really how we finish on Friday that makes the biggest difference on this weekly scale. But we want to be watching this anyway. That is very, very staunch resistance. We saw it act very well last week. A lot of selling up in that 1075 area. On the VIX, oh, what appeared to be a bear flag. We break out of the bear flag. Now we're at a double bottoming area. We're waiting to see what this will do. The VIX on a weekly has just been straight sideways. Not a lot of push one way or the other. So we certainly want to be watching this very closely to see what we can get done here. On the VIX, if we break down, that obviously should be very bullish for the markets. So this could still be what is a low base. A basing here could be a low base for a move downwards. It could be a base for a move upwards. The VIX needs to close for me above this 2730 area for me to really get bearish with the markets themselves. Here are some new plays for the week. AIRM, if we look at it on a daily, I like that it has popped over this upper trend line here and has been trailing it down for quite a while. There's got to be a move coming here. It's been kind of basing for a long time. So it's time for a move. We need a move up and above 36 for me to get bullish on it, or a move below 32 to get bearish on it. Be watching this one and which way the markets go this week. I think will ultimately determine where this goes. But over 36 and under 32 for your moves. BBBB just broke out of this symmetrical triangle here on a nice push up by the bulls. We are up to secondary resistance, watching for a break up and over the 35.55 area. That should probably take us, or should take us, back up to the 36 area. A lot of work to be done on the bearish side if you're going to get bearish on this. I wouldn't even look at a bearish move until it was below 33.70 to this side here. But this is doing really what it should. Runs up, gets into what would be a bull pennant type of a formation here. Now we're looking for a break up and above. So a break above the 35.55 area on Monday or early in the week, play it up to 36. Break above 36 or ultimately 36.75 would be a very nice long play on